Hey everybody, Smart Silver Stacker here, take two with today's live stream. Let me know in the chat if you can hear me loud and clear. Just put a 1 or a thumbs up. But we need to talk about the price of silver because there's something which has really manifested itself recently in the space on X, in the comments here, videos. Even the bulls in the silver space, I've noticed, are calling for a sharp sell-off, a correction. Silver's topped out. And if you watched the live stream yesterday, you know that I myself was warning of the possibility of a correction. Of course, I tweeted yesterday when silver was up around 113 that we should be cautious here because of the massive surge in the price that we saw yesterday. Yesterday's range in silver was by far, I think, in dollar terms, the biggest trading range of any single day in silver. The low of the day here at 101.98, the high at 117.73. So when you see that kind of volatility, it should give you pause to be cautious. But based on what silver is doing today, which is that it's rising again, up 6.6% at the time of this live stream, and this broad sentiment that seems to be incredibly bearish, I'm really starting to reconsider my thoughts on what is happening right now in silver. So we're going to go over that, and we'll go over some charts that I think are important to put this into context. And also I want to examine what some of those in the community are saying, because this negative sentiment in silver, I think, is something that you have to kind of take into consideration when you're trying to figure out what is the silver price going to do next. Here's an example, just to start off, and bear with me on this because we got a lot to cover. But this is a post that was going around on X, and I mean, there's a lot of negative posts about silver right now. A lot from the crypto crowd, even a lot from the stackers. I mean, there are some hardcore perma bulls on silver, and then there are some who just kind of read the situation correctly. But let me just read what Mike Alford here had to say. He said, silver has gone no bid in the physical market. Dealers have way too much inventory and aren't willing to buy. We will need significantly lower prices for the market to unclog. This is going to be very ugly. Now, I mentioned in this comment that the retail physical market has very little to do with what we see in the spot price of silver. And I'm going to discuss some of the factors that are contributing to this volatility and why silver is moving so much in just a moment. But I just wanted to address this because this is just one example of the kind of negative sentiment that I'm seeing out there. And, look at this post, got 346,000 views. So this is, a popular post. First of all, I don't even know what this means, the market to unclog. I mean, as far as I can tell, there are bidders, there are buyers in the physical market. There's always going to be buyers, right? It just depends on what price. So right now, spot price is at like $110. So, that's the spot price. It's a paper derivative. If someone's going to pay you $100 for your physical, that doesn't mean that it's no bid, right? No bid would be you show up with a 100-ounce silver bar to the coin shop and they say, I won't buy that from you at any price. That would be no bid. But just as an example, I mean, look at SD Bullion right now. They're a market participant. I mean, they'll really buy your silver at these prices. You can see this at sdbullion.com/sell. This is their buyback prices. And, they're usually fairly competitive for an online dealer. Can you get a better deal if you hunt around at your local coin shop? Well, possibly. I mean, it's always a possibility. But look at what they're buying back American Silver Eagles for right now, $105. So yeah, it's $5 or $6 under spot, but that's still really over $100 that they'll pay you for your Eagles, almost certainly more than what you paid for them. I mean, you're almost certainly in the green unless you bought, yesterday. So I don't know what this idea that there's, a no bid in the physical market. I don't know where this comes from. And if you want to talk about, the bid-ask spread, they've actually got silver at less than spot. You can get junk silver under spot right now. So, physical, has it tailed the spot price? Yes, but that's not a bearish indication. I mean, to me, that means there's a lot of money on the sidelines among retail investors that could very well come into this space in very short order. We'll talk about some of the catalysts that could drive retail into this market. And if that happens, imagine you've got the spot price rising and then retail premiums start to rise too. It could be that the price of physical metal actually exceeds the paper price. That's not what we're seeing right now, but to me that means we're early, not late, in this bull market. Now, another thing that folks were saying from a technical standpoint about silver's recent performance, I've seen this mentioned in a few articles, a few posts, is this candlestick that we put in yesterday, right? Where silver closed near the lows of the day, and that was also where it opened, right? So it skyrocketed up in early in the day, then it plummeted back down and closed, near the lows. And that could be interpreted as a gravestone doji. This is over at lightfinance.org. They show you an example of what a gravestone doji is. Typically, it's a doji that indicates, and a doji is just a candlestick, but that indicates a top in a bull market. But notice that what happens in the candle following this gravestone is you get a nice sell-off. That's not what we're seeing today. We're seeing more buying, right? So to me, this looks actually more like just profit taking at an extreme high, and then a complete invalidation of that candlestick with today's action. Again, silver's up over 6%. Gold up today as well. So, the idea that there's a sell-off based on technicals is a little bit questionable, I think. Now, there is a big gap here between the 200-day moving average, that's this orange line, and the spot price of silver. And that could lead you to believe that there's a possibility for a correction here to get silver closer to its 200-day moving average. But things are a little bit different this time. And I know those are kind of like famous last words, but we're going to go over some examples of why silver can stay elevated above its 200-day moving average for a long time. Same thing with the RSI here. So the RSI up over 80. That does indicate that something is a bit overbought. But mind you, it's gotten a lot higher than this on the RSI in recent runs up. And when you examine some of the factors against which this is occurring, you can see why the RSI as an indicator can stay up for a very long time. And the reason I'm mentioning these things is because these are themes that I'm seeing repeated over and over again in posts on X and elsewhere. So let's talk about what's happening in China. Some of the fundamentals that are driving this. I'm going to refresh this chart here. This is the most recent price chart out of Shanghai. Okay, yeah, so it's still the same. So right now trading around 27,920. That's yuan per kilo. If you do the math, that comes out to about 4,014 US dollars, or right around $125 per troy ounce. So there's no major sell-off in China. The premiums remain enormous. That's about a $15 premium over the prices here in the West. And look, they got even higher recently, where silver was trading here. You can see it's almost up to 30,000 yuan earlier in the session. That's above $130 per ounce. So premiums in Asia remain enormous on silver. And remember, on the Shanghai Gold Exchange, that's typically actual real silver that is changing hands, right? Now, here's an interesting factor. I heard this mentioned on a recent video by Clive Thompson, who I recently started following. He's been doing a good job of covering all these developments in silver. And he mentioned this in a video I think he posted yesterday. But if you want to know why, it's quite possible for the silver price to just continue moving up from here, right? Premiums in China are a big deal. But look at what's going on the Comex. Right here, in the U.S., you've got the March open interest in silver right here at 104,650 contracts. Now, each one of those contracts represents 5,000 ounces of silver. Why is that significant? Well, this is the most recent silver stock data from the Comex, how much silver they actually have on hand. And if you combine the total registered and total eligible, you get 415 million ounces of silver and change. So right now, the March open interest on the Comex in silver is greater than all the physical silver that they have, their entire warehouse. Now, never mind that the registered category, which is just a little over 100 million ounces, is really all the silver that's actually ready to go out the door. The eligible is there, but it's spoken for, right? But if everybody who had a a contract open at the Comex stood for delivery in March, well, guess what? That would trigger the musical chairs game that we've talked about for a long time. There's actually more open interest right now only for the March contract, just the March contract alone. You notice there's other contracts here which also have open interest. But March has this enormous open interest position, which is equal to more than all of the silver that is in their warehouses. So why is that the case? What are people, why are investors holding this enormous open interest for March? Well, it may have to do with what is happening in global debt markets. Now, let's revisit some of this negative sentiment that I've been seeing. And again, I just cherry-picked a few posts, but let me know in the chat here if you're seeing this kind of negative sentiment in X and on other platforms. So this is a crypto guy, I guess, and I don't necessarily follow too many of these channels or these accounts on X that have to do with crypto, but they've been popping up in my feed nonstop over the past couple days because they're posting about the precious metals nonstop. I feel like they're posting about precious metals more than Bitcoin. Maybe it's sour grapes. Maybe it's, they're trying to talk the market down because they want to sell some of their crypto and buy in, and they want lower prices. I have no idea. But I mean, it's incredible the amount of hate that I'm seeing coming from the crypto space. And so he writes here, I don't care how retarded you are. Sorry to use that word, but I'm just reading verbatim here. Surely spelled incorrectly, which is amusing in context. The irony is not lost, I don't think. You don't look at these charts and think now's a great time to buy. Well, I mean, I guess that depends, right? He's showing the charts of gold and silver here, and then I'm not going to say this word because it's a family-friendly thing, but this is what he said on silver. This is so effed, seeing the silver price skyrocket. And I mean, I guess I don't think it's effed. I think it's reasonable, and it's kind of what we've been forecasting as stackers for ages now. It feels like, but. Look, I've got some charts to show you. So he says, surely you don't look at these charts and think now it's a great time to buy gold and silver. Well, let me ask you, when you look at this, a national debt at $38.6 trillion, do you think it's a good time to buy gold and silver? When you see the interest cost of the national debt skyrocketing to record all-time highs, going exponential. Now, the most recent data here at the federal level up to about $1.2 trillion. I've showed you recently the infographic that shows if you add in state government interest costs, this actually exceeds $1.47 trillion, and that was Q3 2025. We're now in Q1 2026. The data lags, but this number is continuing to rise because interest rates are not coming down, despite the fact that the Federal Reserve is cutting their benchmark rates and is even buying U.S. Treasuries. What about this chart? When you see this chart, does it make you think that buying gold and silver is a good idea? This is the chart of the money supply, now hitting record all-time highs, or I should say fiat currency supply, because that's what it really represents. And keep in mind, they can make this stuff ad infinitum, so prepare to see this go exponential. How about this chart? This is the DXY, the U.S. dollar index. Wow, that's a big fat red candle today. Oh, look, there's a few preceding it. The U.S. dollar index now down to 95. Let's switch this to a weekly view. How far do you have to go back? You got to go back to 2022 to see a time when the DXY was this low. But if you look at previous lows, like in, let's say, 2008, it got down to about 70. Still got a long way to fall, huh? Draw a trend line here. Looks like we just broke that trend line, right? Just doing a little TA in real time here. You can connect whatever points you want. Oh, look, it just broke major support. That's the U.S. dollar index. Does that make you want to buy gold and silver? This might be more important than the price charts of gold and silver. Just saying. How about this chart? The Shiller PE ratio. So this is, maybe one of the better ways to consider the valuation of the U.S. stock market. And you might notice that the only time the Shiller PE ratio was higher than it is right now was at the very height of the dot-com bubble. So you're going to sell your silver, you're going to sell your gold. What are you going to go into? Are you going to go into the U.S. dollar? Are you going to buy stocks at record all-time valuations? Yeah, go buy the Mag 7. That sounds like a great idea right now. Now, look, is there anything wrong with being diversified? No. Could the Shiller PE ratio go higher? Sure. But the point is, I don't see very many people out there right now saying, you've got to be mentally handicapped to buy stocks when you look at this chart that we're looking at right now. They do say that about gold and silver, though, right? So a lot of posts like this, very few posts questioning the valuation of U.S. equities, despite the fact that they are in, undeniably bubble territory. Look how much higher we are in the Shiller PE than we were in the Roaring 20s. The Roaring 20s makes the current stock market valuations look, it looks like stocks were, how do I want to say this? We're much higher than we were then. Let's put it that way, as I fumble over my words here on a live stream. You get the idea. In the bubble that preceded the Great Depression, stocks were not as richly valued as they are today. So, look, you can look at these charts of gold and silver and think, wow, now's a terrible time to buy. But what are you going to buy? How about this? Look at this chart. This is the silver price divided by the Dow Jones Industrial Average. So rather than talking about silver's price performance in terms of, imaginary fiat Federal Reserve note dollars, why don't we talk about silver's valuation relative to other assets? Because that's the only way you can really compare apples to apples. And compared to the Dow Jones, silver is still very cheap. You might notice here that we're still nowhere near the highs. In order to reach the ratio that we hit in 2011 even, you would need silver to be at about $180 per ounce. So that's still a big ways up from here, right? So, this guy's looking at the wrong charts. He's looking at charts that are valued in dollars, not valued against other assets. To reach the silver to Dow ratio that we hit in 1980, and these numbers are actually outdated. I think I made this chart a while ago. Yeah. So when I made this first chart, the Dow was at 46,600. Right now, you can see it's at 49,000. So this is even a little outdated. But you get the idea. You would need silver to be in, the 4-digit range in order to achieve the same ratio that we hit back in 1980. So despite the fact that silver has had this kind of outrageous run to the upside, and I'm not denying that. Look at the long-term chart. It's going parabolic here, but, look, here's the thing. Silver looked like it was going parabolic here at 70. Silver looked like it was going parabolic here at 90. And now we're at 111. There's no reason for it to stop here. And, while we're looking at this long-term chart, look at the cup and handle pattern that silver just broke out of, which based over 46 years. This guy's looking at this chart. You should be looking at this chart. Just doing a little basic TA. Silver is looking incredibly bullish here. So that's not to say that silver can't correct in the short term, right? It's moved up. It is richly valued here by conventional metrics. But look at what it's doing, right? After we had that volatility and that, quote unquote sell-off yesterday, silver finished down, silver was up yesterday. Silver was up 0.61%. It was a wild ride though. But now we're getting more buying. And, silver did just break out of this consolidation. I had talked about how if we got a retest of this breakout level around 100, that would be a bullish development. We're looking at the 4-hour chart now. Well, we kind of did. We didn't really get all the way down, but that's because buyers came into the market before we even touched this. So it looks to me like silver's chopping sideways right now. And that's all that silver has to do, by the way, in order to reset these metrics, like the, let's switch back to this chart. So in order to reset the RSI, in order to allow the 200-day moving average to catch up to the silver price, all that it has to do right now is just trade sideways for a little bit, right? It just needs to put the brakes on a little bit. It's not doing that. Look, it's up right now. It's almost $112, 7.7%. So, there's a lot of things at play here. But all that silver has to do to work off this, overbought condition is just chill out for a little bit, and then it can work out the condition. The 200-day moving average can move up. The RSI can, even out. And also keep in mind, inevitably there will be a correction at some point, right? If you draw out the timeline long enough, there will be a sharp correction. but there's going to be top callers all the way up. And when there is that sharp correction, there's no guarantee that it's going to be, from this level. Maybe silver gets to 150 and then has a sharp correction. I've been talking for a while about the 120 level and how we needed to keep an eye on that, because that's the real inflation-adjusted price if you use the M2 money supply to silver ratio. And that's kind of what we actually saw, was as this level was approached, the silver price was rejected. And I think 120 makes sense, because that's the previous high from 2011, if you are talking about in terms of how much currency has been created. But there's no guarantee that it's going to correct from that level. It might just hang out there for a while, consolidate, build a base, and then blow through it. And yes, eventually, like I said, there will be a correction in silver. If you call for a correction in silver from $100 to $200, and you've been calling for a correction the whole time, and then it corrects from $200 down to $150, it's like, well, yeah, broken clock is right, twice a day, but was that actually to your benefit? And you really only need to worry about this stuff if you're trading the silver price, say using leverage, for example. If you're using options or margin or something like that, then, short-term moves are a little bit more important for you. But if you're stacking, who cares if silver drops to $90? It just means you get to buy some more at a cheaper price. The number of ounces in your stack doesn't change, and I've talked about this recently in terms of physical silver not really being a trading vehicle. It's a store of value that is insurance against a sovereign debt crisis. Speaking of a debt crisis and what's going on in the debt market, let's take a look at bond yields. How about this? The Japanese 30-year treasury beginning to creep up once again. It's beginning to rise again. This is a huge deal. Japan is the largest holder of U.S. treasuries internationally. They hold $1.2 trillion worth of treasuries. Look at their 10-year, also creeping up once again. Their interest cost begins getting too high. They may be forced to sell their U.S. treasuries. Okay, that's a big problem. That could mean a rapid devaluation of the dollar. It could mean a return to QE. If you want to talk about the events, here we go, that are going to affect physical silver and the premiums and bring retail investors back into the market. Look, SD Bullion right now, they're paying under spot for an eagle. Do you remember what happened in 2023? When the bank started to fail? Doesn't it? Raise your hand if you've been following the silver market for 3 years now. If you've been around that long, let me know in the chat. If you're a seasoned stacker, if you're not, if you're new to this space, something you need to be aware of is back in March of 2023 when the bank started to fail and the Fed was forced to intervene with the Bank Term Funding Program, the BTFP. If you don't know what that is, look it up. You can go watch some videos on the channel from 3 years ago. We talked about it a lot. What was happening was the Fed had to intervene to stop a cascading failure of banks. So what was that failure caused by the way? It was by rising bond yields. Because let's go back and look at the bonds today, because U.S. rates are also rising, albeit not as much as Japan. Japan's probably the more important one right now. When bond yields in the U.S. start to rise, what that means is that existing bonds with a lower yield, they actually are worth less at that point, right? It's like a decline in the value of your existing bonds because you can get a new bond with a higher yield. So what was happening back then was that the banks had all these low-yielding treasuries on their balance sheet, which they still have, by the way, to some extent. And that was, as the bond yields were rising, they were taking a hit on their balance sheet. And one bank, Silicon Valley Bank, was actually forced to raise some capital because they had a bunch of withdrawals. So they had to sell some bonds. They had to actually mark their losses to market because there's all these accounting tricks that the banks use to make it look like they're a lot more liquid than they are. That was exposed. The Fed had to come in and start printing money. Bottom line is the premiums on physical bullion soared. You couldn't get the stuff. It was, you had to wait weeks or months. And SD Bullion at the time, just the sell price I follow because I can check a website. I don't need to call a local coin shop or anything. They also happen to be a channel sponsor too. But they were paying way over spot for a Silver Eagle. So at the time, I don't remember what the spot price was, like $30. And I think they were paying like 49 or $50 for Eagles. So if you saw that happen today with the spot price where it is, that means that they'd be paying like $150 for a Silver Eagle with the spot price at 112. So look, I don't know exactly where the cracks are going to start to show in the system first, but we're ripe for a crisis. You see what's happening in the dollar, right? Look at what's happening to the dollar today. Where's my DXY? Look at what's happening to the dollar today. If I can find the chart. Here it is. The DXY plummeting, right? That's not a coincidence. That's because the U.S. is incredibly indebted here. People are getting nervous. Investors are getting nervous about U.S. Treasuries, which are supposed to be, the gold standard safest asset. I'm like, you're going to get paid if you have a Treasury, but how much is the dollar going to be worth when you get paid? What can you actually buy with it? That's why investors are moving into gold. That's why investors are moving into silver. And keep in mind, right now, with silver moving the way it is, you see what's happening, right? People are talking about how retail investors are just dumping their physical metal. So retail is not interested in this. So who's buying the silver? Well, it's not retail. It's industrial fabricators. It's companies that actually need the stuff. There's a supply deficit. There is a massive shortage brewing. Talked about this for years. The manipulation in the silver price, the artificially low silver price, that's going to lead to shortages. And we're at that phase now where you're starting to see industrial users who are actually, they're not buying 1 ounce coins, 1 ounce rounds. They're buying large pallets of 1,000-ounce bars of silver. And that's why, when retail investors sell, one, it doesn't really affect the spot price market because you got to melt all that stuff down. The refiners get backed up, which is the situation that we see right now. That's why SD Bullion is selling junk silver below spot. Big opportunity, I think, if you don't have any. I mean, I got a lot of junk silver. But if I didn't, not financial advice, I'd probably be taking advantage of that deal. You can get silver under spot. That's a good sign. I know spot's high, but I think it's going higher. There is a correction. That'll also be a good opportunity to buy some more silver. Silver's bull market remains intact, by the way, if the $50 level holds. When you look at the long-term chart, right, even if silver corrects down to $50, which, look, anything's possible. I don't think that's going to happen. I think it would be the buy of a lifetime if it did. Like, hey, please correct down to $50. I'd love to buy some silver at $50 again. I back up the truck. But as long as that $50 level holds, the breakout is intact. And you could see a retest and then a move higher. I don't think that's going to happen. That seems like a low probability event. But I don't have a fortune teller's crystal ball. I don't know what's actually going to happen. My point is, though, that you could have a major correction and you could still remain very bullish on silver. So, when it comes to physical, it's like just get more, right? Get more because likely higher prices are coming. It doesn't take a genius to see what's happening in global bond markets. It doesn't take a genius to see what's happening with the global fiat currency system. Gold and silver are being bid up as alternatives. Look at gold today. Before we wrap things up, just look at gold. This is a beautiful chart. That's a big move up today. 3.42% in gold. Gold's a big market. 3.42%. Today, gold is approaching $5,200 an ounce. The miners also, look at the recovery today. The miners were in the red earlier in the day. They were down like 2 or 3%. SILJ now recovering up in the green. GDX in the green. Pretty incredible stuff. Gold to silver ratio continues to fall, despite the fact that gold's having a big day. Gold to silver ratio now down to 46, and could continue. It doesn't look like there's any sign from a technical standpoint of this breakdown stopping anytime soon. It's not hitting a floor. So look, bottom line, could there be a correction in silver? Sure. If there is, I suspect that it's going to be very brief, despite the fact that it could be sharp. But my real takeaway is because there are so many people out there in the space calling for a correction now, it makes me think there's not going to be one, right? I'm a contrarian at heart. So when silver is hated, that makes me want to get more bullish, and it looks like it's a little bit hated right now. It wasn't for a while on the way up. Seemed like people were paying attention, but this idea that you can call the top in a market like this is crazy. I mean, is silver a little overextended to the upside? Yeah, but keep in mind it could get way more overextended to the upside before we're at any kind of a top or before it corrects. It's difficult to say, but when it comes to stacking, the name of the game is just, add more to the stack, take advantage of corrections if we get them. Anyway, leave me a comment down below to let me know what you think about the topics we covered in today's video. What do you think about the possibility for a silver correction here? Look, I wouldn't rule anything out, but given the sentiment and given what silver's doing today, I'm less concerned about it. That's my take. So leave me a comment down below. Thanks for watching, everybody. Stay safe.